Welcome back. You're still tuned into Mid-Cap Radar. Well, for the markets, as flat as it can be, but it is with a negative bias right now. It's been quite choppy for the last couple of hours, actually. Mid-caps are the ones which are outperforming, so 0.2% higher on that one. That index should come up for you on the screen. In terms of sectoral movers, Nifty, Pharma, Auto and IT, these three indices are doing well. So a lot of contribution coming in from the pharma space as well now. When we started the trading session, it was a lot coming from the auto and IT space. In terms of movers, SGBN, that is a stock which is doing really well in the broader markets, 5% higher there. We have Biocon, which is doing well. PG Electroplast, which was a big casualty yesterday after that guidance cut, has recovered some of the losses. 3% higher there. We have IGL, which is up 2.5%, Z Entertainment, which is up 1.7%. So a lot of these stocks in the broader markets which are on our radar as we speak. In fact, we are getting in earnings, and MRF is one of them. Reported numbers a while back. Sudarshan is here to decode the numbers. Sudarshan.
So MRF has reported earnings for Q1 of FY26, and it's not a bad set of earnings. If you compare against the peers, the company has reported a steady set of earnings because raw material costs have seen a sharp rise both on a sequential basis as well as year-on-year. But despite that, gross margin has just seen a decline of around 300 basis points, while its peers had seen a decline of almost 400 to 500 basis points. Talking about the headline numbers, profit was down 14%, revenue has seen an increase of 7%, and for peers, while companies have either seen a decline or revenue was almost flat, and EBITDA was down 9%, margin has come at 13.7% versus 16.1%. Now, going forward, what would be positive, because all the other tire companies have been talking about that in Q2, raw material costs are likely to be benign, and that may aid margins. So we'll have to see going forward how two major input cost act. One is crude and second is natural rubber. So over the last few weeks, prices have come down. So more than the Q1 earnings, what will be important is to track the input cost for Q2.
Thank you so much, Sudarshan, for joining us. Well, there was a brief intraday dip, post which MRF did recover, now trading near the flat line. Well, a few stocks, that are now trading near the day's highest points. Paytm at one point of time was down almost 1%, but there's been a sharp recovery as far as Paytm is concerned. That particular stock has now trading near the day's highest point. The other stock that's made quite a bit of sharp recovery is actually Granules. Remember, numbers came out an hour ago. The company has given some positive commentary coming in as far as remediation for the Gagillapur facility is concerned. That stock higher by 4%. Some of the pharma names, today, names like Dr. Reddy, even a Fortis Healthcare. Remember, numbers came earlier this week, a very strong set of numbers. That particular stock especially continues to do very well in today's trading session. But with that, it's all the time we have on this edition of Mid-Cap Radar, Mutual Fund Corner, when we return. Welcome back to Mid-Cap Radar. Well, a few minutes ago, you did see the numbers of Alchem Labs flashed across on the screen. It was a significant beat to what the CNBC poll was indicating, and that particular stock is now at the day's highest point, up over 6%. But an important corporate conversation is what we have lined up next for you. Garware Technical Fibers is the first management on our radar. The company posted a stable set of Q1 numbers with its profit growing 12%, but margins did see some weakness. To discuss the quarter gone by and the way forward, we are joined by Shujaul Rehman, who's the CEO at Garware Technical Fibers. Thank you so much, Mr. Rehman, for joining us. Well, first up, take us through Q1, and more importantly, you have almost a 10% exposure when it comes to the US market. So what will be the impact of tariffs? Earlier, we were working with a 25% figure, but now it's 50%. So how exactly are you going to navigate that particular challenging landscape?
Thank you for having me on the show. First and foremost, on Q1, I think we had stable results, close to 13% growth in profit and 9% in top line. Some of the businesses in our company have done well. Geosynthetic, which is in the area of infrastructure in India, has done really well. Slow protection for railways and in the area of landfill mining, these segments have done well. We also done well in international fishing, which is the global fishing segment. We have done well. Also, we have done well in some segments in industrial product in India. So these segments have done well, and overall the stable results are there. Margin also we have been able to retain, I would say, at the broad level. Coming to your question, second part of the question about the tariffs. So we have about 10% exposure to USA. at this stage, we are discussing with our customers and trying to find a solution. Obviously, 50% is a very steep tariff. We all know that it's not going to be easy to resolve it. But some of the customers are supporting us. In some cases, we are discussing with them. At this stage, it's early for me to say, but then we are trying to resolve the problem to the extent possible. And we are also hoping that in the next few weeks or so, there will be some resolution from between the government of India and USA. We are hoping for that. So as of now, I think still work in progress, and it's going to be at least impact to us, around 10% or so, which we are trying to solve.
So 10% of the business, which will be impacted by 50% tariffs coming in from the US on Indian exports. Mr. Rahman, you have started the year with a high single-digit growth, that's 9% on the top line. What is the demand currently? You said it was led by geographies in different segments. So which are the geographies which are growing well for you? What is the target that you have for FY26 in terms of revenue growth and margins as well, because that has fallen on a YOY basis?
So as I mentioned, we have done well in certain segments. International fishing has done well for us. Geocentric business, which has been doing well for us, has obviously continued to grow well. Overall, the demand front, aquaculture, we don't see any impact on demand. There is some pressure on prices of salmon, but overall, we don't expect demand to have any impact. Sports segment, which is very heavily dependent on USA, will have some impact, which I mentioned a while back. Other segments, we are reasonably confident. In fact, some businesses in India, business units in India are also doing well, and we're getting some results there, especially industrial product division in India.
So what is the guidance for FY26 in that case?
At this stage, it's very difficult for me to give guidance because 10% is definitely impacted. And some of the customers used to place orders around July, August time for arrival in, let's say, Christmas time, etc. for USA. So those orders are still in limbo, so to say. So we are trying to solve. So at this stage, difficult to give guidance. Overall, you would understand the situation is not very normal for us to give a guidance.
Understood that. Mr. Rahman, a two-part question. Direct 10% impact, which is part of the top line. We also understand you have some exposure as far as the salmon part of the business is concerned, where, there are again tariffs to various other end markets. So would you be impacted in that case? And secondly, there were two Norway acquisitions that were announced. Q2 onwards, do we see that also, coming into the numbers?
First, on the tariff for salmon. So Chile, which is a big market for us, the tariff is 10%. UK, which is Scotland, is also 10%. Canada is actually zero. One of the biggest market, Norway, has a 15% tariff. So this is the overall mix on tariff. So it's, I would say, on the lower side. As far as acquisition is concerned, we acquired a company called OTS, and the results from OTS will be a part of our results from Q2 onwards. So from July. In July, the acquisition is completed. So in Q2, we'll have results. And this will be ROC positive for us. It will also be overall, it's a good segment to be in. It's in the area of oil and gas, in the area of aquaculture. These segments we are obviously wanting to grow. The value-added rope segment, which is also focused for us, this also gives an entry into European markets in that segment. So it's an overall a good mix for us in terms of getting into a segment where we're not there. And there's certain products which we can obviously import and sell in India also. So it's a good synergy for us.
Right. Mr. Rahman, while 10% of the top line comes in, from USA, we understand almost 60% revenues are actually coming from exports. In that case, what is your current hedging policy? Do you benefit from weaker rupee?
Yeah, there's some marginal benefit if the rupee weakens. So, but there's also an import element of raw material. The raw material goes up. So overall, I would say it's positive. At this stage, our export contribution is 55% for this quarter. It used to be normally 60-40. So, but off late, due to better business in domestic, the ratio is now 55-40.
Okay. All right. Mr. Rahman, what is the percentage revenue coming in from value-added products? If you increase it, what kind of margin expansion would you see?
So at this stage, 80% of our products are value-added, operating value-added segment, and 20% is non-value-added. What we are doing is that the non-value-added segment is actually the rope segment, which we are trying to upgrade. I mentioned to you a while back, OTS is also in that direction, in the value-added rope segment. And even in global markets and in India, we're working in various segments, which are value-added rope segments. So overall, this 80-20 ratio will also change. And if it changes, then obviously there will be margin improvement. It takes some time to do it. So we are in the process of doing it.
Okay. Thank you so much, Mr. Rahman, for joining us and fielding all of our questions. We hope to get you more often to get a sense of how exactly business is panning out and how the latest acquisition goes ahead and helps your financials going forward as well. But before we slip into a short break, we'd like to remind our viewers to tune in to the all-new CNBC-TV18 Prime. bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and for the Global Lens at 8:30 p.m.
Good afternoon. Welcome to Midcap Radar, live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. We came off sharply from the highs, from those levels of 24,700, and we've now been consolidating at the 24,550 mark. And that continues to be the case. Very range-bound today. We'll see which way things go.
That's right, and we're coming to the end of the earnings season. A lot of numbers trickling in. It's been a very choppy trading session so far, like you mentioned, but we have a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. D-Street off the day's low, but remains volatile as market trades cautious ahead of a crucial Trump-Putin meet later this week, with implications for India. Auto and IT eke out gains, while realty and financials drag. Mid-caps flat.
Office Space Solutions rallies on a strong first quarter and bullish commentary. Revenue is up 30%, EBITDA rises 60%. Company tells CNBC TV18 they are aiming to reach 1.75 lakh seats by year-end.
Astral under pressure, posting disappointing numbers. EBITDA dips nearly 14%, while margin declines 191 basis points. Company says polymer prices were volatile during Q1. On the other hand, Praj Industries also under pressure after margin contracts over 800 basis points in the first quarter. Domestic ethanol business sees delayed execution cycles impacting their numbers.
Indian Hotels is set to buy 51% stake in two entities with 135 mid-segment hotels across India and Sri Lanka for about 200 crores. The move will help the hospitality major expand in a new segment with a wide geographical footprint.
MRF in focus after reporting their Q1 numbers. Net profit comes under pressure. However, revenue sees 7% uptick on a year-on-year basis.
All right, those are the top headlines that we are tracking for you. Alchem's numbers, by the way, at the bottom of your screen. The stock has surged 4.5% higher, and it was beat on all the parameters as well. There's a margin expansion of around 190 basis points. Profits have come in at 668 crore rupees versus 480 crore rupees, so almost a 180 crore rupee beat. We'll have to see whether it's a one-off or it's led by other income as well, but even revenues are higher, so it's not entirely that beat. Even revenues are higher by 200 crore rupees. EBITDA, so it's a top-down beat that has come by for Alchem Labs. No wonder the stock is surging from the lows of the day, up around 4.5% as we speak. But that's not only the mid-caps we'll be talking about. There are a lot of other names on our radar. Hormus is here to take us through that list.
Indeed, plenty of them. And Sonata Software, you start off with that. Then among the top gainers on the broader markets today, 12.5% higher. Look at Star Cement as well, almost 10% higher on that stock. Heranba Industries, Samman Capital, of course, after the CNBC TV18 news break, has moved to the highs of the day, 7.5% higher here as well. Alchem Labs is a positive earnings reaction, but there are other positive reactions as well. Some of them that came out with numbers yesterday, some of those that are building on to those gains as well. VST Tillers is one of them, was up 7% in yesterday's session, is up another 6% in today's session. Yatra is up another 13% after the 20% circuit yesterday. SJVN is a positive earnings reaction, as is Office. It's 7% higher, although it's off the highs of the day. On the flip side, though, there are a lot of other negative earnings reactions as well that we are getting to see. Look at Man Industries. Praj Industries has recovered from the lows, but still trading with losses of around 7%. But Astral has now slumped to the lows of the day, 8% lower on that stock. We'll take a look at some of the movers on the volumes front, though, and those are some names that are like Himadri Specialty Chemicals, Biocon, Adani Total, and of course I was mentioning Alchem as a volume mover, but now it has moved to the highs of the day as well after its results. And lastly, a mid-cap IT rebound that we are seeing in today's session, just a bit though. We'll look at Oracle Financial, Emphasis, Persistent, even Coforge is trading with gains in today's session. So that is one pocket that has seen some bit of rebound from oversold levels. Back to you guys.
Thank you so much, Hormaz, for taking us through the whole host of stocks, whole list of stocks that are doing the rounds and making all the moves as far as the broader end of the markets are concerned. Well, given the choppiness in the market, it's a very good time to welcome Srikanth Chauhan from Kotak Securities for a quick technical check on the market. Thank you so much, Srikanth, for joining us. Well, it's been quite a choppy trading session. Where do you see markets headed from this point on?
Good afternoon, Vivek. Good afternoon, Sonal and everyone. Well, for Nifty, it is trading with a lot of caution. It is finding difficulties to sustain at higher levels, but at the same time, in last 3 days, it has rejected market. I'm going to say the market has rejected the level of 24,450 on a closing basis. So most of the time, whenever the market fall into those levels, we saw quick recovery in the market, and I think that should be the final stop loss for creating any long position in this market. See, these markets are completely oversold in terms of if we go through with its option statistics. So broadly, I am of the view that 24,450 should be the final stop loss on a closing basis for holding any long position. And on intraday charts or on daily charts, we can very clearly see that the market is forming some reversal formation. So based on that, I am expecting market to move towards the levels of 24,900 or 950, which will take some time, maybe 1 or 2 days. But in the near term, I'm going to say in today's date, in case if there is any correction, then close to 24,500, we should look for adding some long positions.
Okay, all right. Thanks for that, Srikanth. What would your individual technical picks be?
Yeah, I would like to go with a few companies from the chemical basket. There we are seeing good amount of buying interest. In that, Acutaas chemical, that looks good. Here, if we consider its overall technical pattern, then it is forming some consolidation at between the levels of 1250 and 1350. At current levels, 1305, 1310, it looks quite steady, and it is forming some continuation formation. So based on that, I'm expecting stock to move towards the levels of 1500 or 1550. We can keep a stop loss around 1250 if there is any trading position. But I think if there is a medium to positional view, then certainly we should look for adding Acutaas chemical at current levels. We also like Acme Solar, which is currently trading around 283, 285. And there also we feel it is in the specific narrow range, but broadly it is forming some continuation formation, and based on that, the stock can move towards 350 or 375. So Acme Solar as well as Acutaas Chemical should be on the watch list.
Thank you so much, Srikanth, for joining us and giving us your view on the markets as well as your individual trading calls. Before we slip into a short break, here's a reminder for our viewers. Unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Prime Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, along with curated lifestyle benefits.